Greetings to you, day traders, stock junkies, hype dorks, all across the fruited plain. It's Friday. Let's go. Man, I look so different in a collared shirt. The only time that I ever wear collared shirts is if I have to play golf. So I don't love collared shirts. All right. I only like wearing gym clothes, and I don't like wearing suits, and I definitely don't wear ties. If I get invited to something with a tie, I don't go because ties are dumb. All right. Let's see what we got today, guys. Futures are up in some aspects. The NASDAQ is a little shaky, of course. So we got our wins and losses for the week coming in. We have interesting news coming out of Washington, coming out of China, coming out of Tesla trades, used cars. Let's see here. I feel like I learned more with the collar on. You guys are funny. All right, let's do this. I want to start with the Fed's taper. So the Dallas Fed chair, Robert Kaplan, is that his name? Kaplan. Yeah, he's pretty good. I like him. He's a good guy. Yeah, exactly. So hold on, before I get started, John, look at my profile pic. So you know what's funny about that is we came back from Mexico it was in January sometime, and Seth was doing headshots. Hey, there's Seth. Hey. So I came in, I was wearing my gym shorts, and I came in with a shirt on, no tie, jacket, and he goes, I think you should put a tie on. So I threw the tie on, and that's what I was wearing in that picture. But it's pretty funny. It's like the newscasters you see where they're wearing the tie and the top, and then they're sitting there in their underwear or whatever else is under there. So, all right, here we go, guys. Dallas Fed Chief Robert Kaplan on why the Fed should slowly back off. And what he's talking about is tapering off of the mortgage-backed security purchases and the treasury purchases, which is the quantitative easing that's coming in. And then, of course, the interest rates, where he's saying that they need to slowly increase it. So here we go. Dallas Fed President Robert Kaplan, he's definitely he's the first to speak publicly, and he's been the most blunt about this. So I actually like this guy. And of course, I really like the Dallas Fed because my girl, Danielle DiMartino Booth, she worked at the Dallas Fed. And if you guys haven't read the book Fed Up, you need to read it. It's a great book. All right. Okay, Kaplan, he isn't a voting member of the FOMC, but he's going to be in 2023. So Kaplan is wary of the rising inflation, which he views as more persistent than some of his other colleagues do, warning that there's excessive risk-taking and unintended consequences of a policy that if it's too loose for too long, it will be problematic. So he's one of the most hawkish Feds, saying that when he's talking about raising the interest rate. So they did an interview with this guy. I pulled out some of the questions, some of his answers to some of the good questions, and I ignored some other ones. So this question from this guy at Barron's, he's talking about the inflation. It's still well above the 2% target. Does this point move more persistent inflation? They were talking about 3.4% by the end of this year. So some of the pressures will be more persistent, and you will see some broadening, or what we call the bleed. If raw material prices are higher this year, this could bleed into goods and services. Elevated home prices will eventually bleed into higher rents. So let's talk about this inflation thing. Guys, they keep saying it's temporary, this and that. I just don't. You can say it's transitory, whatever, but the issue is you still have massive supply issues. Take one industry, for example. Just talk about the car industry, and it goes to chips. The price of used cars right now is out of control because there's no used cars out there to buy. I went and picked up a car yesterday from my guy that fixes cars. He has a Ferrari right now, $93,000. That's what it should be. He has it on the market right now for $135,000. I have a Mercedes for SL450. I paid $50,000 for it last August. This year, I just went to Auto Trader on Monday and looked at it. It's sitting between $67,000 and $72,000, depending on the miles on the car and the features on the car. But my exact car, I could get probably $67,000, $68,000 for it right now. This is out of control, just out of control. And it goes to demand. It goes to supply and demand issues. There's no chips to build new cars. So we need to stay focused on this. Stay focused on this inflation. There's not anything you can do about it, but don't let them dupe you and say that there's not going to be inflation. Inflation is going to continue to go higher. Investors are trying to understand what the Fed means by transitory versus non-transitory inflation. He said that he avoids those terms. He looks at them as secular and secular. I mean, everybody just keeps avoiding answering the question. That's really what this comes down to. Do you worry about the market's reaction on tapering? We have to be very sensitive to the lessons that we learned in 2013. And when we start tapering, it has to be well telegraphed and it has to be gradual. It can't be any of this. If they go and try to cut the quantitative easing by 50% right off the rip, it ain't going to work. They're going to have to start tapering back very slowly. And when they start increasing the rates, they have to do it incredibly slowly, 25 basis points at a time. If they try to jump up, because I know they want to get it to like 2%, if they try to get it to 1.5% right off the bat or 1% off the bat, it ain't going to work. It's going to spook the markets. Are there more risks to tapering too early or too late? Doing these purchases for longer than necessary creates excess imbalances in the economy and the financial markets, and certainly in the housing market. It would be healthier to be weaning off these extraordinary measures sooner than later. That would give us more flexibility down the road. So if they keep kicking the can like this, it's just going to keep moving in the wrong direction. This is a good one. What would you say to first-time home buyers? I certainly don't think that housing needs the type of Fed support we're giving it right now with the mortgage-backed securities. We are buying a substantially large percentage of net new issuance of agency mortgage-backed securities, and the option-adjusted spreads are historically low and sometimes negative. So here we get to the interest rates. We're going to gravitate back down to trend somewhere around 1.75 to 2%, and that's fine. And I think, and personally, I think that's good. I don't think that you should ever have 0% interest rates. I think what they're doing right now is out of control. But just keep an eye on it, guys. It's fun to read about. It's fun, and frankly, the reason I like reading about this stuff, and I think you guys should too, is this is going to happen again in history, especially if you're my age or younger than me or a little bit older than me. This is going to happen again because of what we are doing as far as government support and bank supports and this and that. So learn now. When I was in 2008, I was trading, but I wasn't really paying attention to what was happening in 2008, the economy and whatnot. I was just so focused on the charts and would just roll with it and make money that way. I wish I would have paid more attention because I would have been able to see what getting this inflated means, what an actual bear market is, and understanding it. So this is really my first time going through it. That's why I want to learn now. So when this happens 10 years down the road, 15 years down the road, 100 years down the road at this rate, I will be able to understand what that means and what is happening a little bit better. So this is something that we were discussing in the chat before. Wells Fargo tells its customers that it's shutting all personal lines of credit. So this did happen to a couple of banks back in the financial crisis. So Wells Fargo is ending a popular consumer lending product and is angering some customers. And frankly, I don't blame them. At least they're giving you 60 days. Let me know if any of you are Wells Fargo customers. I'm not. I used to have money at Wells Fargo. I yanked it all out of there because I didn't like them. The revolving credit lines, which typically allow users to borrow $3,000 to $100,000, were pitched as a way to consolidate higher interest credit card debt, pay for home renovations, or avoid overdraft fees that are linked to checking accounts. Wells Fargo recently reviewed its products offerings and decided to discontinue offering a new personal and portfolio line of credits and to close all existing credit lines. That's the big one that I see. I can see saying no more, but it was shocking for me to see that they were going to close all existing lines of credit. The asset cap has ultimately cost the bank billions of dollars lost in earnings based on the balance sheet growth of rivals including JP Morgan and Bank of America over the past 3 years. So apparently they're suffering, and I'm sure that they got smashed up during the COVID. So this is what they're doing. Last year, the lender told its staff it was halting all new home equity lines of credit, and this is what we're getting to. So customers have a 60-day notice. The bank is the move is a strange one, given the banking industry needs to boost loan growth. So when I look at this, the first thing that popped in my head with this Wells Fargo news was, I think that they are going to lose a lot of clients moving to other banks. Now, the good news for them is, where was it? Wells Fargo didn't disclose how many customers used the line of credits. It had, let's call it $25 billion in loans in the category called Other Consumer as of March. So in the grand scheme of things, of course, this is a big number, but in the grand scheme of things, it's not that many. It's not that. I mean, it's a lot of clients. If they're maxing out at 100,000, that's a lot of clients. This guy, Tim Thomasy from Portland, Oregon. He's a programmer. It's a bit upsetting. They're a big bank, and I'm a small person. It feels like they're making decisions for the bottom line and not for customers. Ooh, imagine that. A lot of people are in my position. They need a cushion every once in a while from a line of credit. He said he's looking at moving to another bank. So I think that's going to happen. I think that's what we're going to start to see is people moving out of Wells Fargo. They might suffer more than they think. All right, Tesla. Tesla's death cross coming for the first time in more than 2 years. Let's take a look at it. So basically what they're talking about, this is momentum trading. And the reason that I pulled this up is because I want to explain momentum trading a little bit. So this doesn't have anything really to do with charts. If you're looking at this on a chart, don't really worry about it from the way that I teach it. If you want to look at it from a momentum perspective, this is what we're going to have on the Everything Money website. So basically what momentum trading is, you pick two moving averages. And this is coming from the book, The Turtle Trader. What's the name of the book? Somebody help me out with the name of the book. Something Turtle Trader. And it's written by Michael Covell. Basically what you're doing is you're taking two moving averages. For example, I'll use this example, the 50-day moving average and the 200-day moving average. When the 50-day moving average is on top of the 200-day, you would be long. You would have a long position going. As the price goes up, you make money. As soon as the 50-day crosses below the 200-day, that's when you would go and short the stock or exit the stock, depending on whatever strategy is your book. It's called The Complete Turtle Trader by Michael Covell. Thank you. So for the last 2 years, the 50-day moving average has been on top of the 200-day moving average, and it's getting to the point right now where the 50-day moving average is about to cross below the 200-day. So why don't we just pull this up and take a gander real quick, see what they're talking about, then we'll get into the article. All right, let me pull up this one only. Okay, so this right here, so we're looking at these two lines. We're looking at this white line, which is on top, and this yellow line, which is on bottom. So right now, the 50-day moving average has crossed under the 200-day moving average. So this is the point of, what do they call it? The death cross. So this is what you got, guys. Let's see if it means anything. Now, let's see what it did historically. The death cross. So going back, let's see here. It was right here. The last time Tesla's death cross appeared was February 28th, 2019. The stock tumbled another 44% before bottoming out 3 months later. So keep an eye on this thing, especially you short traders. This is what you might have an opportunity here on Tesla. And it's funny. I saw a story this morning. I didn't read it, but the headline was why Jim Cramer loves Tesla right now. So the hype dorks are a little bit, there's some controversy between them. They don't know which way they want to go on Tesla. It's going to be it'll be a fun one to watch. See them panic and not panic and think that 70 PEs are all right and et cetera, et cetera, et cetera. China. This is big in the news this week. And the biggest thing that we were talking about yesterday on the private live stream for the top tier only was that it's interesting that the U.S. government wasn't having anything to do with the China talks. Now, this is a little bit different than the Chinese government saying that they're the ones saying they're not going to let Chinese companies be listed in the U.S. markets. This is something different. So let's scroll down here. The White House said earlier, as early as Friday, they're going to add 10 more Chinese companies to the economic blacklist over alleged human rights abuses and high-tech surveillance in Xinjiang. Okay. Point is, I didn't highlight anything else in this article. My point is, make sure you guys, if you are invested in any kind of Chinese companies, Alibaba, I don't know, Luckin Coffee, the one we did yesterday, JD.com, just make sure one of these companies is not the company you have, because it's not going to be good for you. So just make sure you're paying attention to this stuff. It's very important because I don't want you to get burned for reasons that were out there and you just didn't know. You just didn't know they were there because you didn't look or didn't think to look. So just pay attention to that. 10 more added. I think there's 15 total now that have been listed. Now, guys, I'm sure that it's not big companies like Alibaba and such. It's probably really smaller companies, but still, those of you that like small cap stuff, I know we've done a lot of them on live streams and whatnot, so keep an eye on that. Oil prices in flux while OPEC remains deadlocked on supply. So I always tell you guys I don't really understand oil, and frankly, I don't know who can. I mean, these guys, they're arguing. There's 23 countries arguing about oil prices. How are we supposed to figure this out? Earlier this week, U.S. crude oil soared to a 6-year high at $77 a barrel. The OPEC impasse has taken the wind out of the bulls' sails this week. Before talks broke down on Monday with OPEC, Saudi Arabia proposed that the coalition gradually revive the 5.8 million barrels of daily capacity it still has offline in monthly installments of 400,000 barrels through the end of next year, but the UAE blocked the agreement. So, hey, this stuff is so geopolitical to me. I don't really understand it. If some of you guys, maybe those of you that are more into the oil industry or work in the oil industry, you can join the Bid and Ask Nation and talk to me about this. I really want to understand this a little bit more, but I don't even know where to start with this. I mean, there's so many countries that are involved in this. There's weather variables. There's this variable. There's that variable. I don't even get it. Gas prices are going through the roof. I know when we were in Turks and Caicos, granted they don't have income tax there, but it was $6 a gallon. But here I'm paying about $4 a gallon. It's costing me nearly $100 to fill up every tank, so that's fun. But I think gas prices are just going to go higher and higher as supply and demand continues. So speaking of cars, used cars stop getting more expensive in June. Okay, so here's your little chart of the used cars going up, up, up. Here was basically here was COVID, and then it just started going up. This is when all your chip shortages happened. And now here you are up here. And, it started to pull back just a little bit. Joy to the world. Joy to the world. All right. So the Manheim Used Vehicle Value Index published Thursday showed that the price of vehicles dropped 1.3% in June compared to the prior month. Let's see if that trend continues. In May, prices were up 34% year over year. Man, if you have tried to go out there and buy a new car, let me know what you paid for it, or let me know the price, or let me know the percentage of that the car is higher than what you were looking at last year. I was looking at a lot of cars last year, and man, that market has just soared. All right, rental car spending, of course, is up. June inflation numbers come out next week, so I'm really excited to see this. I want to see what they're going to be at, and I want to see if they keep climbing aggressively. So cars are fun. I really like cars. All right, guys. So I actually have a meeting after this show is over with the Bid and Ask Nation ambassadors, and we are going to talk about getting some of you guys on the show. We talk about wins and losses like we're about to do right now, but I want you guys to kind of come on and tell me about your wins and losses, tell me about your experiences, etc. And I think it'll be fun. So if you want to, email me, mo@everythingmoney.com. It's mo@everythingmoney.com. Email me if you have any interest on being on the show. I'd rather you email me there than just message me on the Discord. So just so I can keep track of it a little bit better. mo@everythingmoney.com. All right. This is a pretty cool one. Mason, you're on the show. Reed. This is good. We have Reed, Jacob, and there was one more. Andrea, my Italian compadre. Reed made 66% on NEGG day trade. Do I have my day trading charts up here? I think I do. Let's see what we got. This NEGG thing was going crazy. I think it was up like 250% the other day or something. Oh, yeah, there we go. So this is the day that they did it. And if you just follow your, so here you go, guys. They stuck right in this area. They were over 80% on their stochastic, good engulfing candlesticks, good volume coming in, boom. And this thing went from what, 28, let's call it $28 to peaked out at $70 in a matter of 15, 30, 45, 1 hour and 15 minutes. So 66% from Reed, Jacob Salem, 57%, Andrea 18%. Guys, this is so easy. These guys are crushing it. Day trading is not that difficult. Literally, what I just told you is what it's all about. Your stochastic is over 80%. You have good volume coming in. You're getting good engulfing candlesticks. Game over. Right over here. Over 80%. You have increasing volume coming in. Good engulfing candlesticks. There you go. Make money. And that's really all it is. So if you want to, go back and look at my videos from March. And there's a lot. I do individual stocks. And you can go, and they're on YouTube. And you can find them, and you can see I go through tons of stocks about how to day trade them. And basically what I just told you is what happens. But it just reinforces it in your mind over and over and over again. So Cameron, my man from the UK, 6% on Virgin Galactic day trade. I have so many day traders, it's not even funny. And I got to give a lot of credit to Cash for keeping it. Caesar for keeping everybody in line. Jonathan, here we go. ARKK, 11% on a swing trade. Take advantage of those fools. RJ Wolf, 3% on Oracle, 6% on pins. Let's see here. This is a good one. I tell you guys I always like the losses. So this is Jesse. First trade ever. AMRS lost 4%. And I said it's the best 4% you're ever going to lose. And I said, he said I lost 4%. I said, give me the reason why you lost 4%. He entered too early without an engulfing candlestick. That's your first mistake. If you enter without an engulfing candlestick, you're going to get burned. Instantly, it dropped below the 25 and 100-day moving average. Right there, you're facing tons of resistance. You're not going to be able to get through it. And his stochastic was way too close, and it was in the sweet spot, but it was way too close. So, guys, I've tried to make this as simple as possible for you, and I think it is pretty dumbed down. And I don't think that this is that difficult. I've taught a lot of people to do this. We have almost 700 people in the Bid and Ask Nation. A lot of people are making money. And join it. Join the Bid and Ask Nation. I don't know what else to tell you. Let's see what the yields are doing. So the yields ticked up a little bit yesterday. Let's see here. So the 3-month is still creeping. Still slowly creeping. 10-year, it was at 1.25. It closed at 1.3 yesterday. So these numbers, the yield curve is definitely flattening. So flattening means that the two curves are just sitting on top of each other, obviously. If the 3-month, and here's the 10-year, if the 3-month drops, let's scratch that out. Too bad this is live. All right. Here's your 10-year. Here's your 3-month. If this 10-year drops below the 3-month and the 3-month comes up here, you're in some serious trouble. You are in some CIS twabble. And that happened last year during COVID. It happened during 2008. It happened in 2018 when everything was chaos in the end of the year. I don't know if you guys remember that. Actually, a lot of you probably don't remember that because a lot of you guys are new. Go back and look at the fourth quarter of 2018 and see the chaos that was ensued. And everything was coming, and everyone was saying that it was the China trade talks and this and that. But a lot of it had to do with overvaluation, and that might have been the talking point headline, but just like COVID was. All right, Everything Money. This is patreon.com/everythingmoney. If you guys want to join, if you want the software, if you want access to me, if you want to be on the Discord, if you want all of this stuff, guys, is so cheap. $7 a month gets you in the Discord. $24 a month gets you in the Discord. Plus, you get all of the software from everythingmoney.com. In the Bid and Ask Nation, $68 a month gets you Discord access to me, access to all the traders, access to all the trading channels, etc. I had one guy, actually, no, it was Cash. He messaged me this morning and he goes, hey, I just want to let you know that, he was talking to somebody else. He said, I wanted to let you know that in my first trade in the Bid and Ask Nation, after paper trading for a couple months, he paid for 10 years of his Bid and Ask Nation membership in one trade. So that's what patience gets you. That's what learning gets you. As soon as you're ready to trade real money, you get at it. And obviously he crushed it. So that's that. And if you want to do a real estate deal with Paul, and eventually, pretty soon, I'm going to put up here something with me. If you guys want one-on-one sessions with me, I'll let you buy them and I'll teach you. And personally, I think I've done one-on-one sessions before with people as test runs, and they've done very well. So I think you guys, if you guys are serious about this, it will behoove you to do that. Let's check futures one more time. Give me a few stocks. I'll run through them real quick and help you guys out. Russell is up 1.25. NASDAQ's still down. I'm not too concerned about that. Dow is up. Of course, it has to recover from yesterday. The plunger protection team has to come in and pump futures, and can't make everything look bad. If the markets look bad, then, oh my God, we can't have that. All right. Somebody give me some stocks here. Are we getting merch soon? Yes, you're getting merch soon. I promise you, you're getting merch soon. I will do it when I become a millionaire. Well, maybe, arguably, this is going to make you a millionaire. Used Teslas were being bought at higher prices at CarMax. Then back to Matthew Jones, you're right. I was looking at Teslas, and they are crazy used prices. All right. Intel, Clorox, QCOM. All right. Oh, boy. See you, Matt. Have good luck to you. All right, CLX. Let's see, Clorox. This was very disruptive stock, but cleaning is no longer disruptive because you don't have to wash your hands anymore. Guys, did you notice something? So when COVID came around, we talked like people are just so gross. It took COVID and it took a pandemic for people to realize they should wash their hands and clean their stores. It's disgusting. That's why I don't like going to stores, because they're filthy. And now you have these people that like wiping down booths at restaurants and this and that. It really took you to have a pandemic for you to wash your hands and be clean. Disgusting. So here's Clorox, and since the height of this, they've just been on the decline, I guess. It's coming back to reality. I don't know. Maybe people don't want to wash their hands anymore because it's too expensive. All right, so you're coming up through the sweet spot nicely. I'm okay with that. You got to get volume in here. I do not like that you're right below that 100-day moving average. You got to bump up here, and then you'll make a nice run to the 200-day moving average. But next, I saw Intel. I'm going to do Intel. And then, okay, I'll do Alibaba. All right, Intel, I don't know what it's doing pre-market, but it's coming through the sweet spot. But look at that. You're stuck. You just bounced right down to the 200-day moving average. Then you have the 25 and 50-day. This is going to be a tough one. I would definitely look at this from a value perspective instead of a charting perspective. Alibaba. So what's the deal here? Is this? I'm assuming that this has to do with everything that's happening with China's government saying, because look at all these gaps. Yeah, this is crazy. So you've gapped down here. If you want to do anything with Alibaba, swing trade it. I'm sorry, don't swing trade it. If you want to do anything with Alibaba, day trade it. Don't do anything else. Just day trade it, because this is chaos. If you try to go long or short on this, you're going to get lucky one way or the other, but you're also going to get burnt. Amgen, let's see here. Amgen coming through the sweet spot. I want to see this red line just a little more vertical. But here, you're not going to like what I have to say, but I think you got to get through this 245, 246 area, because otherwise you're not going to do very well with that thing. All right. Yeah, Baba is one ugly looking chart. I will do one more. Market's open now. Let's see what the market's doing. All right, everything's up, including the NASDAQ. So the world is all better. The plunger team worked. The plunger team did a good job. Good job, plunger team. Way to go buy futures like nobody's business and say that you're not buying assets. No asset purchases being made. Noted. Oracle, last one. All right, so Oracle was trying to break out over its... those are all-time highs, right? I think they're all-time highs. Let me double check before I say something incorrect. Yep, their all-time highs. Oh, that is kind of ugly move up. So you're coming through the sweet spot just fine. Let's see what your volume is doing over here. Volume is looking good. If you make a new all-time high, go for it. If you make a new all-time high, go for it, and you will do very well with Oracle if this thing keeps running. If this market keeps running. That's going to be the caveat. And personally, I do think it will, because daddy ain't backing off spending and pumping the economy and doing futures purchases overnight like they did tonight or last night and move this thing forward. So, all right, guys, you guys have a wonderful day. I will see you on Monday. And if you're in the Bid and Ask Nation, I'll talk to you all weekend. Have a good one. Peace.